All right. Hey everyone, it's Ben here, and again, I'm wearing computer glasses. I know a lot of you guys are probably not used to seeing me with glasses, but anyway, today we're going to go over Amazon stock valuation analysis kind of thing. And I got a lot of, as some of you might know, I do DCF videos where I start from scratch, and it usually takes like 1 to 2 hours. And then a lot of people have been asking for like a shorter version of like key findings and stuff like that. So that's what I'm going to try to do after each DCF video, and this is like the first of hopefully many to come. And here's the agenda for today. I'm first going to go over Amazon situation overview, which might look familiar to you if you watched the DCF video, which is linked down in the description, by the way. And then we're going to go over Wall Street Prep, who's the sponsor for today's video. Then going to do a DCF overview, go over some of the key findings from that. It's going to be pretty brief because obviously there's a DCF video. Something I didn't go over at all though is trading comps, so I'll spend some time doing that. And there's something I found in equity research that I thought was pretty interesting that I want to share as well. So that's what we're going to go through today. And so starting off with Amazon's situation, it's currently trading as of the night of June 14th, 2022, about $102, and it has falling quite a bit because of the macro environment. And yeah, it was like pretty steady for most of 2021, and now it's just kind of fallen off a cliff. And you might have been used to seeing Amazon stock price being something like $2,000 or something like that, but Amazon had a 20-to-1 stock split last week or so. And a few things I just want to mention about Amazon that I think a lot of people don't know if you don't like really look into the actual company is that first, Amazon divides its sales into North America, International, and AWS. And North America is its e-commerce in North America. International is e-commerce everywhere outside of North America. AWS is its cloud services. And most of Amazon's revenue comes from its e-commerce, right? So like 279 billion, 127 billion. Cloud, AWS is 62 billion. But most of the operating income, so basically the profit, actually comes from AWS. So see, it's 18 billion here, while e-commerce is 7 billion and negative 924 million. And so e-commerce is obviously still a huge part of Amazon's business, and it's kind of like I think a long-term, if Amazon is able to continue scaling, the profits will eventually come more and more. AWS, on the other hand, has been increasing profitability by quite a bit, and so that's actually one of the huge drivers for Amazon stock. And something else interesting is Amazon's e-commerce share has been increasing steadily over time, currently above 56%, and it's just increasing. And then Amazon's cloud share, actually, let me look. Here you go. It's at 31%. Or 33%, which makes it the market leader as well. And so a huge growth driver for Amazon. So yeah, that's the really brief Amazon situation overview. I do want to also preface to let you guys know that I'm not a financial advisor. This is not financial advice at all. I'm just giving you some information that I've been able to find and use it as like one point of your research. But next I wanted to go into Wall Street Prep, and they have been training analysts at investment banks, universities, etc. for almost 2 decades. They've been around since 2004. And basically they just have a bunch of self-study online courses that I highly recommend if you want to learn more about like financial modeling. So what I would recommend is their premium package. It's $500, but if you use my code RARELIQUID, you get 20% off. You can also get 20% off of any class here, so like private equity, real estate modeling. I do also recommend their accounting crash course, which is only $39, but use my code to get 20% off, and it'll be even cheaper. If you don't really know much about accounting, which is a backbone for modeling, then I do recommend it. And then they also have like an Excel crash course as well. But going into this like financial modeling premium package course, it's covers basically everything I learned at banking when I was at JP Morgan. There's financial statement modeling, DCF modeling, M&A modeling, trading comps, transaction comps, LBO modeling. So yeah, just very thorough course where you can just learn a ton about modeling. So that's the situation overview, and so we've done these two. Now let's go over the DCF. All right, so this was back a few days ago, and Amazon has fallen since then. Let me double check again what Amazon's at. So it's at $102.31. This is as of June 14th. And so what I am thinking about how to really go over this overview for the DCF, and I guess the best thing I can do to go over it over for just kind of a brief period of time. And again, like the full DCF video is available on YouTube. I posted it a few days ago, so if you want more detail, definitely you can see how I built everything. But starting with revenue, right now I'm basing my assumptions off of the street case, and I'm assuming that the street is going to be right or very close for 2022, and then also for 2023. And then from here onwards, I decrease the revenue linearly by I think it was 1.25% right here. And the reason that I did that was because in comparison to, I kind of just compared it against what the street thought for the remaining years over here. But as I had gone through in my previous video, the assumptions after 2024, after 2023 are a bit unreliable because there aren't as many brokers, and that's true for everything over here. And so when I saw this like kind of trend of 15.5%, 12%, 11%, and it jumps up to 13.6%, that's obviously nonsensical. And so I wanted the DCF to be pretty conservative, and given that Amazon has been growing above 20% for the past 8 years or so, obviously as the base gets bigger, it's harder to maintain that kind of growth. So I thought it was like a pretty conservative and reasonable assumption to just kind of linearly decline this by 1.25%. And that was kind of what I decided to do for revenue. So as you can see here, my switch was 1 is conservative, 2 is base or street case, and 3 is optimistic. I decided to go with a more base case scenario for revenue growth. And then for my EBIT, I decided to go a little bit more on the optimistic side. And this is kind of just balancing out my conservatism kind of for the revenue. And then also the whole analysis that I did over here, which again, you can go through in more detail if you want, is I took a look at what different equity research analysts were projecting for EBIT margins. So like Morgan Stanley had a range from 3.6% to 6% from 2022 to 2024. Cowen went from 4.4% to 15.4%. Credit Suisse 2%, all these numbers here, right? And so what I basically could tell from all of this is that the street is basically believing that maybe AWS is going to become more profitable, and same with e-commerce. And so there was a pretty large jump in margin growth. And so as you can see here, the street basically thought it would be 3.6% to 14%. Cowen, which was one of the more aggressive ones, 4.4% to 15.4% in 2027. And so what I did was I basically took a little bit more of an optimistic approach, where in this first year, even though the street thinks it's 3.6%, if you look over here, for the past 4 years or so, Amazon has not been really below 5%. And right now, with like supply chain issues and macroeconomic issues, this is why Amazon is having a lower percent margin than normal. But I thought if we're being a little bit more like optimistic, and everything will balance out later, as you can see. Like as we discussed, the EBIT margin was going to be something around 14% in 2027. But even in my optimistic scenario, I'm making it at 12.7%. So even my optimistic scenario, I don't think is overly aggressive based on the street. And this entire DCF is a street-based, high-level street-based DCF. And I think I'm being a little bit more conservative than the street. And as I explained in my previous video, I do want to be more conservative with my DCFs, especially during this current environment, because there's just so much macroeconomic pressure, right? And so if I can find an entry point where I'm being very, very conservative and the stock is below that point significantly, then that's probably a good sign to buy. And for taxes, pretty simple. I just kept it as 19%. You know, like I think that's just kind of a bit standard. I just kind of did it based off of what Amazon's previous year was, and maybe it's also a little bit conservative, I don't know. And then for DNA and CapEx, let's see, what did I do here? So I had it linearly, wait. Okay, well, first of all for, sorry guys, let me remember what I did here. Oh, I guess I connected it. Oh, sorry. So I connected it to the street, and these are like the street estimates. And so I just kind of thought, you know, like, let me just use what the street thinks the numbers will get to. And the numbers, like, I liked the trend, even though the 2024 onwards numbers weren't really as reliable. It seemed like to me that the numbers, you know, it made sense for me that CapEx was going to come down a bit while DNA was going to kind of increase over time, because your DNA should trend towards your CapEx. And so in my last video, I mentioned that these are two areas that I want to kind of look into more in my future DCF for Amazon that I update. But as of now, I was okay with these figures. And then change in net working capital, pretty standard stuff. I just got an average over the past few years. And so, yeah, that's how I got to my share price of 101.52. And that's pretty close, I guess, now that Amazon stock has dropped to $102.31. Right now, I believe that, oh, sorry, I should also mention that for my WACC, I'm using a 10.5% WACC and then a 3% terminal growth rate. And I think the WACC could also be argued to be a little bit conservative, because Amazon is one of the largest companies in the world, right? So let's say we're a little bit optimistic, we use a 9.5% WACC, then Amazon's share price should be about $120. And so that kind of makes sense to me personally, Amazon being around $100 to $120 based on the current like macro environment and everything. Based on the current macro environment, I think if the S&P, which is currently around 3,700, goes down to 3,500 or 3,000, which I definitely think it could, Amazon will probably fall as well until to the 90s or 80s. And I think based on that, Amazon would be a buy for me, because it'll just be trading below its share price and its implied fair value based on the DCF that I built. And my DCF, I believe, is a little bit conservative. So yeah, that's kind of my view based on my DCF. I hope this like overview was helpful. It's my first time kind of doing it, so let me know if anything else would be interesting or helpful. But the next thing I want to do is go over the trading comps. And so what I did, this is the trading comps that I send out to Patreon members every week, updated with new data. And let me actually just hide some of this because it's not relevant. Okay, so Amazon is the company of focus today, and we're going to be comparing against other companies that are similar peers. And so I'll just kind of go through these one by one. Amazon 52-week high, 55% of its 52-week high. Compared to its peers, it's kind of in the middle. Only one lower really is kind of Facebook, Adobe, and Salesforce. And then revenue growth, Amazon is kind of in the middle compared to its peers when you look at 2021 to 2022 revenue growth, but then it's projected to go a little bit higher in this next upcoming year. Actually, I guess this is historical, so I should probably do this. Okay, very interesting. So it looks like wow, Amazon is expected to grow quite a bit in 2023, 2024, but I think actually the reason I didn't have 2024 is because the numbers are not as reliable. So I would not really take too much stock with this. Actually, I don't even know if this is right because I don't know if these can actually grow by this much. So let me double check. This is 46. Sorry, that's gross margin. Oops, forget this. So I guess I included only 2021 to 2023 revenue growth because 2024 is not very reliable. So anyway, looking at revenue growth, looks like Amazon is kind of going to grow faster than its peers, or is projected to. And then this is where I think like things can be a little bit misleading. So Amazon EBITDA margins, profit margins, obviously very, very low compared to its peers. But as we had kind of gone through previously, most of Amazon's profit margins actually come from AWS, which is growing pretty quickly. So these are a little bit, you know, I think what would be more beneficial in a sense is to actually kind of look at AWS in itself and its EBITDA margin, and that will kind of show like a different story. So let me just kind of do a little bit of that right now, actually, because I think it would be helpful for all of you to kind of see what I mean. Okay, so AWS operating income is 18 billion. So this is operating income for AWS. And we also need our sales number. All right, so margin for EBIT, not EBITDA, is 30%, right? And then if we also look at, I think there's actually D&A broken down as well, somewhere here. I think I remember seeing it before. Yeah, depreciation, amortization, AWS, 10 billion. All right, let me just double check I got this correctly. So 2021, yes, 2021, got it, okay. So then this is D&A for AWS. So EBIT margin. EBITDA is your operating income plus your D&A. So EBITDA margin is EBITDA divided by your sales, which is 40%, right? 47%. So obviously, if you look at Amazon's EBITDA margin by itself and you include e-commerce, which as we had gone through previously, the operating income is 7 billion divided by 280 billion. I'm not going to even calculate that because that's just like 4% or something like that, right? International sales is actually negative and sales are like huge. So if you only look at EBITDA margin for Amazon like total, then it looks pretty bad and its profitability looks bad. But if you actually kind of dig into it, their profit margins for a huge part of their business that's actually driving a lot of the profit is 47%. So if you consider that, not really focus on this, so 47% out of this compared to everything here would be, you know, near the top. So for on a trading comps basis, it actually looks very interesting. Like Amazon is like a very interesting company in that regards. And so if we actually go to like trading multiples here, we can see that Amazon's at like 15 times EBITDA for 2022, 11 times for 2023. And that's kind of in line with their peers. But again, if you were to, you know, just only look at these figures and kind of compare, I mean, even this revenue growth is probably for AWS, like it's a lot higher. So actually, I'm curious what that would be. AWS 62 I guess it's not that much higher. Okay. Oh, actually, no, it's very high, 37% compared to like 12% for the overall company. So anyway, obviously not looking very profitable on a PE multiple basis, but this is also why, you know, a lot of people tend to look at PE and be like, oh, it's so high. Like, how could you invest in this company? But I think I kind of just explained to you why like PE multiple is pretty irrelevant, right? And then, so I guess what I'm trying to say and the ultimate punchline from all of this is that Amazon, to me, on a trading comps basis compared to its peers here, considering the AWS story, it looks pretty fairly valued at the current price. And also combining that with the fact that, you know, in the DCF, in a very, very conservative DCF I built, I think the implied share price is about $101. But I think, I think it's pretty conservative. So let's say Amazon goes down to, let's say $80, $90. I think the analysis so far that I've done is that it would be a pretty safe time to enter if it got to like 80, 90 bucks. Even at the current price right now, I think it's near like fair value, or cheaper than fair value. But right now, you know, the markets are dictating everything. And if you want to know more about like what's really happening with the markets, I have a video about that in my description called like explaining what's happening with the markets. But let me go into the last thing I wanted to show all of you. And I'm going to try to do this analysis myself because in my future DCF video, I want to do like a more built out revenue build with the different key components. It's not going to be super detailed, but it's just going to have like North America e-commerce and then international and then AWS if I can find the data. So anyway, what I found here was that Cowen ascribes a 17.5 times EBITDA multiple to AWS, just to the AWS part of estimate of $67 billion in 2023 of EBITDA. So basically they think AWS is worth 17.5 times $67 billion. And that gets to a total enterprise value of 1.2 trillion. And that's actually above what Amazon is currently trading at, I believe. So as you can see here, Amazon's at 1.04 trillion, right? So Cowen believes that if you only were to look at Amazon with the AWS, then according to their analysis, the enterprise value for the company for AWS by itself is $1.2 trillion. So that pretty much means, given that Amazon is currently at like about $1 trillion in equity value, and of course there's some cash and debt, but it's not going to move it around that much. You're kind of getting the rest of Amazon for free if you believe this stuff, because obviously like this EBITDA multiple could come down. It could be something like 12 times, and so it won't be 1.2 trillion. But basically what Cowen is, what I found interesting here is that AWS is a huge part of Amazon's value. You could argue it could be the most valuable part of Amazon's business compared to e-commerce. And you're kind of getting that e-commerce part for free if you believe that AWS is worth at least $1 trillion. So yeah, that's something I thought was interesting. So yeah, let me know down in the comments. This again was my first time doing like this kind of brief overview of a stock after I'd done a DCF. Hopefully it was interesting to all of you. In the future, I will try to stream and live, but I just started my MBA and like things are so crazy. I just have to do streams or record these videos whenever I have the time. And lastly, just a reminder, if you want to check out Wall Street Prep, use my code RareLiquid to get 20% off of like a financial modeling course. And yeah, that concludes the video. Hope this was helpful. Catch you all next time. Peace.